The kill zone. What is the kill zone? Well, you're looking at the S&P 500, the ES futures contract. Let me bring this into view. This area down here is about 2,400. Up in here is what was the last high. And we made that drop, that precipitous drop, now 2 weeks ago. We bounced up in to nothing, no man's land, and then came down and made what appears to be, to many, to be a double bottom, a double bottom to be challenged, a double bottom to be broken. Maybe, maybe not. Our systems track price in several ways. So before we cut the wood, so to speak, we measure once, we measure twice. Sometimes we might even measure 3, 4, 5 times, because what we don't want to do is get caught in something that nobody else sees. And one of the concerns that we're having right now, we're seeing it all over the Twitter sphere, is this ABCD pattern that might just be too dang obvious to everybody in the market. And we got every Tom, Dick, and Harry playing for the ABCD down. And let's take a look at what we have. This is where we are right now. Price is currently at 27.27. We mark the dead pivot area, the hard daily, weekly, monthly pivot area, actually at 27.37 to be precise. Probably right in. Yeah, right in between this area, right in here. It happens to be. What you're looking at is one of the other charts that we like to use. It's purely a price chart. It's a Renko chart, and the Renko brick size is set at about 0.5%. We set it back here, and 0.5% at that time was 12 points. Today, because the index is a little higher, it's probably a little bit less than 0.5%. But you really get to see the price action. And what happens is that when you have a market running up, then out of nowhere we get the drop. Hard to believe. We do this sort of action, and then we drop again. And when we get in here, we make just about the same low. We get a lot of I hate to say it, but amateur hour. We get a lot of people to go short in the hole. This is not where you want to short. This is not where you want to short. You want to short, up in this area. You'd want to be maybe a buyer here for that trade, a buyer here for that trade. But and then what happens is they try to guess, so they get shorted here. Then they get squeezed out, get really confused, and then you have people guessing. Okay, now we're going. They're looking at their daily charts, or God knows whatever they're looking at. They could be looking at hourly charts, which time just distorts the hell out of the price action, and they get hedged up or wedged up in here. What we may have going on, though, this would be the area for us to short at roughly, we're trading now at 27.25 thereabouts. From a risk reward standpoint, we would be a seller here and then look for price to come back down. And realistically, I don't know if we're going to get a shot at testing the lows on this purely horizontal line. Everyone else will be looking for that. We'll be watching it on this, and we want to be sure that if she bounces off of that we don't get caught. And that's where a lot of people could get caught. And then what happens is it gets into this kill zone, and we could be right in here. We could be right about here when the Federal Reserve is meeting next month. And you want to be nimble and ready to go, because we'll get a follow through, either boom, breaking out or breaking down. Now, I'm not saying that that's how it's going to play out. I don't have a crystal ball, but we see these patterns intraday, we trade intraday. We see this all the time. And if you're fortunate enough to ride that, and you're fortunate enough to ride that, great. But when you see this broader kill, what we call kill zone, you've got to be precise with your orders, and you've got to be playing off of here and playing off of here, because if it breaks out, boom, the trade is over, and you don't risk that much. For us, it's always about, if we're wrong, what are we going to lose? Not much. We let the profits will take care of themselves. The losses, that's our job, is to manage that risk and make sure that if we're wrong, because we will be wrong, but it'll be very, very little. We're not going to do the Gartman thing and lose 20% on some wild ass position. In any case, I'm Bagadon at StockMarketCaddy.com. We've shown, please check our Twitter sphere. We're mechanical, systematic traders. Do we use charts? Yes, but we use charts that most people don't use, and these are price charts, point and figure charts, Renko charts, case charts, to name a few. And we really, get right in there and get as surgically precise as we can. Good luck, everybody. As always, if this resonates with you, if you like this sort of approach and versatility to the market, feel free to check us out. Bagadon, StockMarketCaddy.com.